What's happening, guys? Welcome back to another Sunday Scan. We have a special episode coming up. We are going to be joined by Ariel Hernandez to go over a bunch of market thoughts and main watches for the week ahead. It's been a wild market. We've had a bunch of geopolitical headlines. We've had oil spiking, gold going nuts, quantum moves, things with nuclear names. So a ton of things are moving. And so we want to make sure that we can break down the sectors that are moving. Where is money going to? Where is it coming from? And there's no better person to have on for that than Ariel, because he tracks so many sectors. He knows what's moving. He knows what are the strong sectors, what are the weak sectors, what is setting up. And so we will get into all of that and more in the episode ahead. So make sure that you stay until the end. Before we get into that, a couple of things. First, we have a Traders for a Cause coming up in July 17th in San Diego. So make sure that if you are in the area or if you want to attend, that is a great event to go to. We will link some tickets for that. And you have some incredible traders like Lance and Kyle Williams and others who are going to be at that event in San Diego. So if you've been wanting to go do Traders for a Cause, a regional event, definitely check that one out. It should be a great time. And then the only other thing is that IU is running a special right now. So we get asked all the time, people want trials. They want to see what IU is all about. So we are running a $49 for 14 days of access to everything in IU. So for that, you get morning watch lists, you get nightly watch lists, you get live study sessions, you get all the technology that we have, AI scrapers, you have moderators in there sharing their best ideas, all in real time. So it's just an incredible place to trade for people who are taking this, seriously and want to trade at a professional level. There's no better place than IU to really check that out. So make sure that if you're interested in seeing everything that IU has to offer, that you check out that deal before the video starts. Click the link, sign up, and get 2 weeks for $49. So before we get into the episode with Ariel, I'm going to give the disclaimer now that neither of us are financial advisors, and these are not buy or sell recommendations. Everything that we talk about is for informational and educational purposes only. Now let's get into the episode with Ariel. All right, we're happy to have Ariel back on Sunday Scan. Whenever the market's changing, whenever money is flowing from places and to places, you're the person that comes to mind to really pick that apart and to break it down. So welcome back to Sunday Scan. How you doing, man?
Oh, I'm doing well, Chris, and congratulations too, man, on the honeymoon. Nice to have you back on set as well.
Thank you. Yeah, we had a great time and, came back to a pretty wild market, especially over the last week. We're seeing things with Middle Eastern conflicts. We've had oil going nuts. We've had gold going nuts. Some sectors are breaking down. Some sectors are heating up again. And before we got filming, you were talking about, there's some comparisons to the 2022 cycle, but there's also some significant differences. You want to, share some of your thoughts around what you meant by that?
Yeah, well, how do I explain this? When 2022 was going on, you already had like a kind of an uptick in crude oil. And then all of a sudden the Russia-Ukraine conflict started. And then that was kind of like your blow-off move, actually. That's when you go into like the $130 for crude oil. And it wasn't, you already had an uptrend in an XOM. You already had an uptrend in these well-established big leaders. And then all of a sudden you had this big momentum run in all of your smaller names, your Indo in particular. I think it went from 7 to 70, your HUSA, your IMPP, your OP, your USEG, your BRN, MXC, et cetera. And then we kind of noticed recently, and I said this on the 6th, going back, almost 8 days now, and it looked like crude oil had broke below that $65 level, but then quickly found its footing and then started to create a little base underneath that prior level where you would say, okay, this is your breakdown level. And we could go ahead and actually quickly peek at the chart. And I'll actually pull up crude oil futures. And I've got this little shaded area here on the daily, right? And for the sake of conversation, I'll pull up a weekly. And you can go ahead and see on the weekly how this was support, close to a level of support, and big support right in here. Similar thing with the daily, right? And so you broke below this level, but immediately started to base and then build higher lows right in here, started to tighten up, started to turn back up. And right on the 6th, right in here, kind of when we broke right back into this level of what now is supply, we're kind of starting to turn back up. And I said, it's starting to actually look like crude is a bit of a failed breakdown. So right around that time, a few days later, your HUSAs of the world, kind of start to bottom a little bit, right? And then you really get this big ramp up. Anyway, you could pull down the chart. That was just a quick example. But when you kind of see these like really big euphoric 12% spikes, one, they're incredibly uncommon, right? This is not 12% move. At one point I was like, what the heck is going on? Um, and I can't say for sure because I'm no geopolitical expert, but I don't think that this is going to be something that's going on for weeks and weeks and weeks and weeks, right? This happened a little bit last year between Iran and Israel, and it's happening again. And this seems to just kind of, you're getting like this look where maybe oil is a failed breakdown, which obviously can lead to quick moves up, squeezes right back up. Positioning was a little offsides for crude oil, just a few weeks ago. And it feels like that might have just been, people kind of getting themselves offsides, right? And getting themselves back to neutral in terms of their cot positioning. So, and again, when we look at a name like Husa, this is a name that's already kind of been through this cycle before, and we kind of know where all these names typically end up anyway. If we're going to focus ourselves into energy and say, well, hey, fine, crude oil has bottomed, it's going to go into quality. And again, recently a CRK has been acting well. Some nat gas names like EQT, AR have been acting well. Really nice weekly base. So I kind of get the impression that maybe energy can lead a little bit. And, you can go ahead and even look at a chart like AR on the weekly base. And I could pull this thing up too. Really, really nice looking chart. Obviously, kind of looks like when you look at the weekly, you're just already in an established uptrend, big base here on a weekly. And every time you're now starting to build a series of higher lows and you're now tightening up on the right-hand side on the daily. And you could very well say, hey, are we coming out of this big consolidation range on the right-hand side of the chart of the weekly? But then if you really zoom back on it, you're like, hey, could be just a huge cup and a handle. Okay, fine. So you've got a few names and even a CRK where it's like you had a really nice base here, a push, got nice and tight against ascending moving averages or flattening at this point, and just a clear push up, really nice demand for this stock, and did nothing wrong while crude oil was trying to find bottom. In fact, this happened while crude oil was still kind of almost breaking down, or really not even breaking down anymore, but going sideways. Then as crude begins to kind of find its footing, this thing has a big up day before crude oil has that 20 or that 12% spike. And then again, obviously, I've said it before, and I'll say it again, buying commodities on gap ups, on overnight gap ups, tend to be a little bit tricky. Commodities are typically best bought against ascending moving averages. And sure enough, a CRK, pulls right back in to the range. And then by the end of the day, just gets bought right back up. But again, this is the same deal. You've got other nice charts too, like MPC, really nice flag consolidation back above the 200. CVI, similar deal. Really nice move up, consolidation, continuation. Like CVI looks fantastic. But again, is it a little bit gone? Should you have recognized this bull flag a bit sooner? Some of the stocks, they tend to show their hand before the sector does. And, before crude had a 12% move, right, CVI was already breaking out of a little bull flag above all key moving averages. So, the sector was kind of already tipping its hand. But I don't know that this feels anything like 22, because you already kind of had an uptrend in crude oil. And it wasn't until kind of the late stages of that parabolic move that you had your Indo go from 7 to 70, that you had your Husa go from 5 to 15, and again, your OP. And a lot of these names, the problem, like you mentioned it earlier when we were off stream, was, that's probably just a bit of, any short interest left back in these names, just unwinding those positions.
And you brought up a great point with, commodities companies, or when you have these giant commodity spikes, there's a real difference between, the companies responding quickly to that as opposed to like a secular bull market in that commodity. So for instance, like, with Middle Eastern headlines, you have instability, you could have supply chain disruptions with oil. So that could last, weeks, that could last maybe a couple of months. But really what, tends to cause these multi-month or multi-year bull markets is when you have like structural, long-term fundamental supply demand imbalances where you have crude, running just like in 2022. And then you have something to basically kick that even further. And that makes the companies go parabolic, as opposed to more of a stable or, choppy commodity market. And then you have something happen, and then you have all the names gap up, but no one knows if it's going to last just a couple of weeks or if it's going to be a year thing. So I think that was a great point that you brought up of not chasing these commodity moves on the gap ups. But if it's real, if it does continue, you will get those ascending moving averages. You'll get, crude really going out. And I think that some of those moves will tip their hands.
Yeah, and it could be that these are still at the beginning. Like it could just be that crude oil, gets its. I mean, it went from, low 60s all the way to 77. I mean, that was super, super impressive in just the matter of 10 days or something like that. So big move in that space. But it's probably likely that crude just finds its footing somewhere between 70 and $80, right? Somewhere between the high of Friday. Again, that was such a gigantic move. And unless, like you said, unless there's some real supply chain disruption, which I don't know that there is, right? I got to look into that a little bit more. But that doesn't mean that the well-established companies, the real names in the world, can't do a little bit better if crude oil starts to settle at, high 70s, $80, because, effectively, they were kind of already bottoming, and a lot of these crude oil names, whether you're an Oxy or a DVN or et cetera, even XOM or CVX, they had kind of gone through their stage 4 downtrend already. Like if you look at a FANG or a DVN, just absolutely obliterated, but they're still alive. They're still making money. They're still positive EPS, because the thing that they sell, as long as we're not below $45 a barrel, they're still making money for every barrel of crude that they pump out. So, now they're just going to be making more money for every barrel, but their overhead hasn't gone up any, right? Their employee costs haven't gone up any, right? Their cost to drill it out of the ground, refine it, extract it, et cetera. Those prices haven't necessarily gone up in any kind of way just because of the spike. The only thing that's happened is the thing that they're now selling us is now more valuable. So they're the only ones benefiting.
Yeah, and I think a good comparison is like to compare the oil market with the gold market, because similar to 2022 with oil, gold has already been in an uptrend. It's had a weaker U.S. dollar. You've had some geopolitical tensions. You have blowout spending and budgetary things with the government. So maybe we could pull up a gold chart and just compare some of that. So some of those companies have been in solid uptrends, and now they're starting to speed up a little bit. So that's a big comparison.
Well, and by the way, when I first noticed gold, it was a 10-year cup and handle. So this thing, the first time I ever mentioned gold was at February 28th, going into last year. So, last year. So right as this thing was trying to come out of this tight consolidation, and I'll actually scoot on back, we were right in here. You had this little move up. You're above all key moving averages. You tried to have a failed breakdown and then a reclaim of those moving averages. And then again, another sideways digestion. Started to get really tight in here. And I remember it was leap year, February 29th. Last year, because I won't forget it. Normally things don't happen on the 29th. And sure enough, this started to really push out on March 1st. And it has been in an uptrend for the better part of 15 months. So again, that's exactly what gold has been doing, is exactly what any really good stock would do. They go up, they go sideways, they go up, they go sideways, they go up, they go sideways, they go up, they go sideways. And it's really just the same stair-stepping pattern. But if you really go ahead and zoom out on crude oil, and it's best to really zoom out on crude oil. If you look at the weekly here, this was just a massive, and it's good that I zoom this one really far out. Just a really big, this is 2011, and here we are in 2023, a decade-long cup and a handle, right? You just don't get really a whole lot prettier than that. And it's crazy because it's not until now that people are like finally really interested in gold. And even myself, I found myself trading some of these gold miners, but think about where we're trading it now, and think about how little attention it had last year for some insane reason. When, if you go back, I was literally saying, this is a 10-year cup and handle. This is a 10-year cup and handle. This thing is gorgeous. I chose the wrong name. I bought GFI and it was like way too choppy. The best names at the time were WPM and AEM. But even now, even as gold is kind of, really starting to speed up a bit away from these moving averages, gold is still not crowded. When we think about gold, and again, you look at some COT data, people are actually selling this move higher, which is kind of unbelievable to me, considering the geopolitical tensions and the falling dollar and the fiscal issues. And I guess as long as those persist, right, gold is just doing what it would normally do, which is go up, go sideways, go up, and then go sideways. Now, we don't know when gold will finally get crowded, but there will come a time when gold gets crowded on the long side. Everybody who can own gold does own gold. There will be a piece of great news that comes out, or really, should I say, maybe it's bad news for the dollar. And you would be like, holy cow, gold should really be strong on this, and then gold will close down. That will be the cue that probably the move in gold is done. But for now, it's just been a falling dollar. It's just been, inflation still kind of, and it's crazy because now that, crude oil is going up, how does that play into the whole inflation narrative? And the Fed can maybe cut interest rates, and well, now maybe you can't because an uptick in crude oil. So it's funny to kind of all see it, kind of intercorrelated. But gold is doing nothing wrong. And if you looked at a stock like NEM, and again, I don't really love chasing, commodities on a gap up, but, NEM had a nice little gap up. And this looks like it could potentially just be starting a stage 2 uptrend where the 200 is finally getting above the 200. We're establishing ourselves above the 200, above the 50, and, pullbacks into rising support. You're being supported at rising moving averages. And, a spot like this, risking off the 50 simple is much easier in terms of buying commodities than, maybe chasing a gap up that could very well be sold into. Like I said, you buy CRK on a gap up, and then, you're kind of instantly getting killed and then maybe shaken out, and then, maybe having to reposition. But that's not to say that if you look at the weekly on this, this isn't in an established uptrend, because it is a cup, a handle, a breakout, perfection. It's just choppy. And you kind of have to understand that. And so long as the commodities, whether it's crude or gold, are in an uptrend, these names can do well. Just understand how you like to buy them is, kind of my thinking.
100%. And then, comparing that to businesses that might be a little bit hurt by some of these moves. So something that was on my radar over the last week with these headlines was airlines. And not only did you have some negative news with, unfortunately, a plane crash in India, and there were a lot of casualties from that, but also, if you look at one of the major expenses of airlines, it's oil, it's fuel. And so as oil spikes 12%, and airlines are not high margin businesses, that can really cut in. And so, we've definitely had some moves down in DAL, UAL, some of those names as well.
Yeah, all of them. And yeah, that makes tons of sense too. And I mean, it kind of stinks because as a consumer, that they're really not going to eat those costs, right? It will cut into their margins, but they'll just end up passing those along to us. So, the best thing we could hope for is to not see crude go back to 100, right? That's what we don't want.
Yeah. And then, with some of these moves, like we were talking about, if they're headline driven, if they're, very sharp moves, those tend to be a little bit less stable moves as well. So if we have some kind of a headline come out, so basically when you had, the Middle Eastern conflict headlines, oil spiked on those. And so, from the base, from the equilibrium where it was before to where it is now, that's all from that headline. So if we are in a situation where we get a reversal of some of those headlines, so let's say Iran or something like that is like, we did one response and now, we're going to cool it down. You can have big reversion trades in that almost back to that prior equilibrium. And that could be, that can cause bounces and things like airlines, but it can really, the commodities themselves, oil and everything can have big retraces and
big unwinds. Yeah. And again, you're starting to get when you just break over a key moving average, like the 200 simple moving average, it's not often that you just break through and then you just continue to rocket higher, right? Normally you might get like a potential retrace back into that level, especially being that they are commodities, right? As long as, like you said, there are no real structural issues going on with crude oil. And again, I don't know that there are or there aren't. I know as far as, kind of the headlines that I was reading, Israel was kind of attacking the nuclear side of Iran's program and stuff like that. And, I'm not one to say whether or not that's the right thing to do or not, but, it didn't seem like they were attacking, the fuel. So, it's just anything to do with nuclear. It seemed like, were the targets for them. So, could that even be a headline that drives, maybe some local, and again, like when people think of nuclear, we're talking about weapons, right? We're not talking about like, powering nuclear power plants, which are completely different types of uranium that are used for, they're enriched completely differently for people who don't understand. Like if you think that might affect a CCJ, it wouldn't, right? Because CCJ is enriching uranium for nuclear power plants, not for atomic bombs. So
Right. Yeah. And then usually the only time it tends to spill over is if you have like, if you remember in 2022, I think there was some stuff between Russia and Ukraine where a power plant looked like it was leaking or something like that. That
yep.
tends to be the only times that I've noticed that it'll spill into anything that has nuclear in the name, whether it's actually related or not. That's the only time I've seen it really hit those names hard as they, as people are fearful of like another Fukushima or something like that. But on the topic of nuclear names, OKLO, this was a big one, big market leader, and some giant headlines over the last week. Has this been on your radar?
Yeah, it has. Now, the reason I didn't buy it coming out of this consolidation in here is I don't like buying anything that's a bit extended from the 50 simple. And at the time, we're about 70% above what would have been a potential entry on an Oklo. And that's just a bit too uncomfortable, right? I'm buying it 6-7. Now, I know this is a mid cap name. I know it's a momentum stock, but, unless you're really buying it, out of this little first consolidation and gap up, and again, you would have dealt with a very uncomfortable move lower. So, you're probably trimming some into that strength, and then you're holding on an ascending 20 or 10. And it's just too much volatility here for myself. But you could kind of see how some of these name acts, right? They'll make a really big move up, effectively retrace the entire move, and how much higher these things go, I don't know. The volume is definitely telling you that it's potential these things want to go higher. They had an offering on 6/11, and the very next day they were a bit higher. They kind of sold off from there, and we're just kind of finding some support near the prior left side peak and really the highs most recently. So could this go higher? Absolutely. And then obviously SMR is the next one. But, these are starting to get a little bit too extended from all key moving averages for me to be comfortable. I personally like buying things that are a bit tighter coming out of, some kind of consolidation, from some sort of tightness, something in here looked a little bit nicer. And then, you've got that gap up, big volume, and then continuation from there. So usually a little bit easier to trade, a little bit less risk. I feel like if you're buying it up here, you're kind of jumping off the 12th floor, hoping not to break your neck. So, and then even, for me, something like, and I'll go back and I tell people this all the time, the reason that an Oklo and an SMR are moving the way they are is they're not leading they didn't lead the move higher. The stock that led the move higher was a GEV. Right. GEV has been in an uptrend. And the first time this thing did its uptrend, right, then you get an Oklo moving. And then, it's obviously pulling back, and so does an Oklo. And then the second time this starts to move, right, that's when your Oklo and SMR come back on. And it's how it works effectively every time, right? You get your well-established large cap leader, and they'll go first. And then you'll start to get everything trickle off into the mid caps and then eventually small caps, right? And small caps could easily be something like your LTBR or something like that, that finally catches fire behind. And it's the same. We've seen it before, in EVs, right? First it's Tesla, and then, Rivian comes on, and then Lucid's right there. And then all of a sudden you start to go into the others, right? Whether it's XPEV or Lee or, Solo and Candy and, these other, your Workhorse and Fisker is finally what it'll trickle down to. And so really the market is the same kind of thing. It's like, first you want to look for what is your strong mega cap, and then that starts to lead sentiment into the mid caps. And then that starts to lead into some, trickle down sentiment into the small caps. Because, for some people, they might not have the capital to trade a $300-400 stock, $500. So they go looking for that cheaper one, maybe has an options chain, maybe has a theme behind it, and they go playing that one. And then, these things can go a whole lot further than people think. And if I look at a GEV, I still say this looks pretty healthy. In fact, when this thing was making this kind of frozen rope, higher, I was like, okay, before I had ever come into this thing, now we're going to need some digestion. And you're starting to get exactly that. In fact, you started to get something like that happen in here, where you make this big move up, and then you just get your digestion, and then you start to break out of that consolidation. Now, nobody knew DeepSeek was going to happen, and obviously this move down for DeepSeek is what happened. But again, a leader doesn't die. They just reestablish themselves and then continue back on their merry way, whichever way they were, the trend is, which the trend for now on these names is up. And it's the same thing. You've also got a CEG. And recently, I think the one that's been acting a little bit better is a VST. And these are your leaders. And this one looks like it's probably going to go higher as well. And you got to look at what VST has done in the past. I mean, this thing has been an absolute, you're talking from 20, and then a big move up, a pullback, normal digestion for a super big move, and your continuation higher, and then a pullback, and your continuation higher. Now, do we just need a little bit more sideways here? I would tend to think so, but sometimes charts don't really care. They can just continue and continue and continue.
Yeah, and these names, they're all so related to the AI sector as well. And we really had, quite a rebound in a lot of those names. NVIDIA went from, a year long, doing nothing, consolidation, downtrend, and then it started to tick back up again with the market recovery. So I think that there's a big correlation between the AI power names and then the AI sector in general, kind of, catching a bit again over the last, month or 2 months.
Yeah, and it's been these are just powering your data centers, right? And your AI theme is going to be, I mean, even a name like Dell, obviously we saw the massive move in Oracle. And this one's just good to take a peek at. I mean, what a gigantic move, right? You just get this I thought there was a clean little bull flag in here. And then you get back over the 200 simple moving average. You just get this clean little uptrend, gap up on earnings. I haven't been buying earnings gap ups personally. I've been talking about these high volume closes where you just look at the close, 199.86, and you're looking to be in above 199.86, good above, bad below. And you can obviously see a few of the recent winners with Sezzle where you just get that trend up beforehand, you get the gap up, you get the high volume close, and then Dave is another one that recently. And so these names that have been getting these high volume closes, there have been some nice continuation from those levels. So kind of good to keep in mind. Sometimes people will see an Oracle and they don't know exactly how to get themselves involved on day one. But if you just wait for that close, if it's a super high volume close, track that close, good above, bad below, and it fits the theme, right? It's like it's a data center play, like a cloud play. And again, your NVIDIA's. And while we segue to some of that too, it's like the backbone of the data center and AI theme, in my opinion, is semiconductors. Chris, I don't know, your thoughts on that, but it feels true. You can't have these chips and you can't have smart robots and smart cars and without an abundance of chips. And I'm starting to now see the semiconductors come back into play. And it's not just an NVIDIA. It's an LRCX, a KLAC, an ASML. I didn't like the action in MPWR, but you've got an ALAB, you've got TSM, and all of these stocks are starting to act well. And, it'd be good to take a peek at some of these, right? You get your move back above the 200, a little digestion, and a breakout. And you'll notice that all of these look fairly similar. And then here's your LRCX, your move above the 200, little digestion, and a takeoff. And then even an ASML, move above 200, little consolidation, and you try to take off. Now this one's having a little bit of a false start. And this is kind of how it goes. Even SMCI look fairly similar, but again, a false start. And why? Well, Friday was a bit of a heavy day in the market. And so now if you're looking at these, you can kind of tell yourself, hey, if I wanted to own a few of these, which are the acting best and which are acting worse, I would probably avoid an SMCI. But like an LRCX and a KLAC who are acting best, or even an AVGO, or even a TSM, where you get that move up, you get a gentle little consolidation in here, and then you get continuation from that level. Again, a pullback on earnings, but you're finding your footing again, which is exactly what you want to see from a leader. And then obviously TSM, who makes everybody's chips.
Yeah, TSM's been strong. And then I think also like the trade headlines, like, you had the US and China work some stuff out and, really a much more friendly tone overall. And so a company like TSM, they're very sensitive to, if there's chip bans, if there's big restrictions, if there's uncertainty, people can't price that into earnings and everything like that. So now that there's a little bit more certainty, I mean, look at the comeback on some of these things. They've really, gotten their feet back under them.
Yeah, and again, it's not just even a TSM. I mean, even a CRDO. I mean, these things are acting. You get this ugly move down in March and February, March, and into April, and then you just get this awesome rebound, and we're starting to just digest here, which is exactly what we want to see. So I love it. I think really nice gap up in earnings, but obviously had gotten a little bit stretched in the short term. A bit of digestion, even while the market's, kind of going through a little bit itself. Because even if you think about the market, when you think about what the market has done in the last 5 or 6 weeks, it's a year's worth of gains, right? So before we can really power higher and be in an environment where it's like middle of April, all of May, and early June, we're starting to get to that like sticking point where like, okay, the leader should be well established to you, right? And there are going to be other names that get a little bit extended, even like a Carvana, or even like a Rubric, or even like, Zscaler, where you say to yourself, you know what? These things need a bit of a cooling period. And it's totally normal to see some of these things come under pressure. And hopefully that means the market comes under a little bit of pressure, kind of check some of people's nerves for just the propensity of buying the dip, buying the dip, buying the dip. And even from my own trading, I've kind of noticed recently, I've been getting stopped out of some names. So, before getting too aggressive, I need to see pivots reestablish themselves, stocks not be so dang extended from their 50 simple moving average. Because when you are, it's just hard to run, right? It's just hard to continue higher while you're getting historically stretched from some of these moving averages. And the same thing is true for those nuclear names, right? Whether it's nuclear, some of these semis, or some growth stocks, again, like a Carvana coming under big pressure, it's just totally normal for them to do nothing.
Yeah, and especially as a swing trader like yourself, I mean, you're looking for the strongest stocks coming out of good bases, jumping out of the first floor instead of the 10th floor, and you need a trending market for a lot of those things to really, start to do well. So if you're noticing that you're getting stopped out more and the market is kind of chopping, digesting some of those things, I don't think that I think that's a feature, not a bug of being, a trend trader. It's when a trend slows down or when new factors come in, you're going to have a reshuffle, and then it's kind of adjusting to that and not just forcing, the last 2 months of action, not forcing that to the future, but really just realizing where the market is right now. And that's what you're really good at doing. And then another thing is the quantum names. So we were talking about, sectors, speculative things that are in different parts of their cycle. So quantum had a big comeback. The NVIDIA CEO said some positive things about that. And so you've kind of had another breath of life in those. But then you have some names like QBTS. They offer, they have a big offering or some share sales going on. So you had some of those names that were overextended again, starting to, consolidate. And some of those look like they might be breaking down a bit again, especially in QBTS.
Yeah, and it's how our market goes. It's like you can even see like with an IONQ, it came right up to that level where it filled its gap on the daily, right? You get this insane move right off the lows. And I drew a line here, which is, okay, what's the low of the day? It gap down on January 7th. And you come right up to that level. You try to fill the gap, you do, and then you just digest right underneath, and all of a sudden you start to trickle off. Well, crazy how a stock likes to fill the gap. And then, here we go. You leave another gap, which you fill, but then all of a sudden pick up in volume. The market starts to digest a little bit more and you're starting to get a little bit heavy. And it's the same thing with Rigetti. They did an offering too. And the thing kind of trickled off. They finished their offering. You had that spike back up, but again, it's like you're right back on those lows. And then now QBTS, at one point was acting, kind of like your leadership. You break out of this consolidation. It's one of the only names, I think it was the only name in the space that did go and see a new high and meaningfully. And then again, you just digest and you kind of start to break down, from these levels, and you can just start to see it on the daily. They're all individually acting heavy one by one. These offerings are just, they're effectively selling paper, increasing the share count. And so, it's difficult for a stock to go higher in that environment alone. But then you add to the fact that maybe the market's pulling back, and, again, quantum isn't here today, right? It's still a future, prospect that it could be, something in the future. But I would say the best quantum name out there, if there is going to be one, is your IBM. It's the company who's been working on it the longest, and they've also been the stock that is the absolute strongest, making new highs seemingly all the time. So, funny how this works too. If you think about the quantum theme and you think about the company who's actually been doing quantum the longest, it's actually IBM. They've been working on it since the 80s. Keying on the word working on it, this is the trend that you get. And now obviously they've got a well-established business underneath, doing their science experiment. But when a stock as big as IBM, has an underlying theme that they're working on, which is quantum, and then eventually that can actually start to trickle down into these smaller names. And again, some of them, are a bit more speculative than others, right? Like something like a QUBT, they don't really have themselves a well-established quantum anything, and but here they are, right? They make a really big move back. And obviously these are good for trading, but again, still even from the speculative side, a bit too extended here. And unless you've got a really, really awesome business that you understand, buying the dip sometimes on some of these things is can be pretty dangerous. So let it tighten up if anybody wants it. Let it establish the right-hand side of the base. Let it build you a series of higher lows just like it did in here. Let it get nice and tight. Let it give you an area where you're not jumping off the 12th floor. And then, if you want, if the theme is still alive and well, you can go back in there and play it. But for now, the theme is a bit under pressure. The theme got a little bit extended. The theme ran actually halfway well with, an Oklo. And again, even Chris, to kind of talk about how it is that one stock can power another higher. So NVIDIA, gives chips to a CoreWeave, right? CoreWeave IPOs, right? So NVIDIA is your big boy, right? And then a few weeks ago, you would argue CoreWeave is like your mid cap, right? And it goes on this big extended run. Now, while this run is happening, right, who is the small cap that CoreWeave's then associated with?
Yep, that was an APLD, and we had some interesting moves with that.
Yeah, and so there you go. You get APLD. All of a sudden, CoreWeave's moving, and during CoreWeave's up move, well, funny, APLD, the small cap, is getting some love, and then all of a sudden, CoreWeave starts to, speed up. APLD has some news, and then you get the fast move up, and then all of a sudden, CoreWeave comes out and says, well, yeah, we closed the rest of our position in APLD. So, then you start to get a bit of what feels like some unwind. Don't know how long that will last for, but it's just how these things transpire, right? It's how these things play out. First, you get CoreWeave running because NVIDIA is running, and it's similar with an NVTS. And then because CoreWeave's running, you get an APLD. And it's like in the back of your mind, you kind of know APLD is a data center play, very similar to a CoreWeave, just much smaller. Their APLD is kind of in like the construction of these data centers. And if a CoreWeave were to continue to come under pressure or unwind some, even though CoreWeave owns no APLD, sentiment would normally take you to APLD will do something very, very similar. So, just to kind of touch on how these themes work from, top down.
Exactly. Yeah. It's a total ecosystem. You have a food chain with it. And then, you have something, usually some kind of real fundamental driver or some kind of news that gets people interested. They go to the top, the leader name, and then it's just all basically sector saturation as it trickles down that food chain. And then a couple other names I just want to touch on real quick before we wrap up. Some names like PLTR and then also CRCL. Those are, maintaining towards the highs. They look like they could be potential breakout names. So do you have any thoughts on some of the stronger names during a choppy market?
Yeah, I thought 133.5 was the high for Palantir that it needed to maintain. And, it obviously had a little bit of pressure going into Thursday with what was going on. But then Friday, a ramp right back up. They're supposed to be, I guess, a defensive stock, right? Pentagon works with them a ton. So, considering that there might be a war going on out there, Palantir, it's done nothing wrong, right? You just get the move up. You get, from 10 to 120, you get the Pentagon's, kind of cut some budget. And so that directly affected a Palantir. Palantir had that news plus the market going down, really kind of, chopped the stock by 40+%. The stock, when the market was trying to bottom, was the first one kind of tipping its hand that it wanted to go higher. It did exactly that. And then has just done nothing wrong. It's just digested above all key moving averages, right? A couple of moves where it kind of tested your nerve per se. But if you were in it from lower, maybe not something that would totally have made you freak out. Palantir continues to look and act pretty strong. And then as for Circle, I am rooting for Circle because they are a Cathie Wood top 10 holding, and I am an ARK holder. And if ARK goes higher, we'll be throwing a Cathie Wood poster in my office. But with that said, it's like you can't just fall in love with all her holdings, right? Because a Circle's doing well or ARK looks okay, because I go to buy Shopify and I'm buying it, and then literally the next day it's just getting totally smoked. So you got to be a little bit cautious too out here. If you're just getting stopped out of brand new positions, the market's kind of giving you some feedback that either the market needs a little bit more time, you're not on the right names, or the stocks that you're trading are just terrible. So there's really no other three options that
I feel like it's a sign of the times too, because those companies that she holds, like the emerging tech, usually not super profitable, but kind of a lot of momentum behind it, some revenue growth, some good headlines along with it. I think that especially in the later stages of like a huge run up like we've had since this recovery, I feel like those are the names that really tend to lead. And then you get to an event like we have some of the stuff with the Middle East, and that's when I think you find out whether the market is still going to continue, or if you have an actual risk off mode happen. All these speculative sectors, including a lot of the nuclear names and things like that, almost anything that doesn't have real sustainable growing earnings, a lot of them come in a lot. So we haven't seen that yet. So I think that the market is not in risk off mode, and unless things escalate further, I think we're more in a consolidation rather than a full reversal. But I think over the next week or two, we should have a lot more information to see how the market's going to be.
Yeah. And you know what? And people need to remember too, like there are stocks that are just getting completely left out of this bullish cycle. And, you can't go chasing the laggards. And Shopify, for instance, was kind of one of those, even though it had a clean technical setup. But really more in particular, a name like Apple, right? A name like Apple just has not even gotten above its 200. I can't even think of another Mag 7 stock that isn't above its 200 simple moving average. Google's been acting well. Amazon's been acting well. Netflix is near all-time highs. Tesla had a pretty big move and hanging out now above its 200 simple moving average again. Meta looks fantastic. Microsoft made a new all-time high. So there's your leader, right? For the Mag 7, it's the one that made a new all-time high, Microsoft, and right behind it is an NVIDIA, and right behind that is Meta. But Apple's just being left for dead. And so part of me goes, man, this market would really have been stronger if had Apple participated. And Apple made any kind of a move like NVIDIA or Meta or even Amazon, the market would have seen new all-time high. We would have V-shaped recovered right into an all-time high because we're that close already. And now just imagine had an Apple actually participated for a 20% plus rally, 30% plus rally. I mean, that would have been insane.
Yeah, they've been getting squeezed on so many fronts with some of the lack of innovation, which obviously that's been a criticism for the last couple of years. But you just had their new event showcasing some of their new tech, and it's really nothing to write home about. And then you have Trump's trying to get them to build everything in America, which would raise their costs. They were having some Chinese headline tension before, so I feel like they're just in a cycle where they're kind of plateaued, but they're still buying back a lot of stock. So instead of really falling, in multiple compression, just kind of have this consolidation, and until the market really either falls apart or something, I feel like it's going to be just kind of range bound until you have some kind of a catalyst or event to really break that range.
Yeah, part of me goes, if Apple starts to revert back to April lows, that could actually start to cause some market pressure, because not only is a Microsoft pretty damn extended, right? And Microsoft gapped up and then has effectively just been straight beeline to new all-time high. Doesn't look very healthy, might I add. Needs some right-hand side of the base because every day there's just buyers coming in. It was like when Meta was on the 20-day green streak in a row. Eventually, it comes under pressure and it loses 200 points really quickly. So it's kind of good to keep that in the back of mind when you look at something like a Microsoft, right? It's at some point it's going to crack. And then when it does, you're probably going to see a name like Apple come under big pressure as well, right back to those April lows, which is kind of the crappy part if you're an Apple shareholder, but
Yeah, totally agree. And then, the week that we're coming up to, we have some major events. We have the Fed meeting, interest rate decision on Wednesday. We'll get some more color about, how maybe the new oil price spikes are going to affect our outlook, if at all. And then also it's MOPEX week. So the names that are very extended, that are options driven, a lot of times they have more reversions, on the later part of that MOPEX week as those calls decay and those hedges come off as well.
Interesting. Yeah, I always hear you talking about that, and I'm never well prepared enough for those unwinds.
Sure. Yeah. I mean, it doesn't work all the time. And sometimes if there's other things that kind of supersedes the MOPEX cycle, but a lot of times those are really the areas that I like to focus in for those very options driven names, because, we see it all the time in the market. You feel the market just absorbing every single dip, and you have those passive flows. Sometimes those flows are from index funds rebalancing. Sometimes they're from passive option flows. But a lot of times in the later part of that MOPEX cycle, you'll see those flows start to go away. And so when the market dips, it doesn't just immediately soak back. It'll stay a little bit heavy. So those are the times that I like to focus in for some of those reversion trades. But again, we have so many other factors happening right now that it's just one tool in the tool belt. And it's not something that I'll be trying to force if, the market, if we have positive headlines with the Middle East and the market makes, some different highs. So Ariel, we covered so much today. Thank you for your time. Do you have any kind of closing thoughts as people get prepared for the week ahead?
No, just I would say be patient here, right? And it's in particular if you are someone who's interested in swing trading, if you can't gain traction with 10% or 15% of your portfolio, don't start increasing your share size and then thinking you're going to get traction with 30 and 40%. Let the market give you more clean setups to trade. Let the market give you follow through so you can get more involved in stocks. There was a moment there where I had 10 plus positions open and we're down to 3 longs and a short. And that's just kind of the environment that I find myself in. I find it to be fairly tricky. There are stocks that stand out as leaderships, like a name like Hood or a Netflix or an AVGO, and that's totally fine. But it's just been a choppy environment. And again, like you said, headline driven. So just continue to be patient, let things tighten back up. Normally there's only 2 or 3 really nice swing periods throughout the entire year. The rest is just digestion and understanding that we just came from one of those really awesome periods from the market. So be patient and let setups, tighten up, and then you don't have to be the first in the pool. Let the stock show you some follow through first, and then say, okay, that's really nice to see. And then you start to slowly dip your toe, and before you know it, you're doing cannonballs. So
yeah, and that's such an important point when you said, the market, it goes through these spurts and these periods that are really, really good for swing trading, for trends, for everything like that. And then the periods that are not good, what really, gets people some alpha is if they avoid big mistakes during those lulls, as opposed to, doing really well during the good times and then just giving it all back, forcing that. So, listening to the market, leaning in when it's working, and then just pulling back and being a little bit more patient and disciplined when the market is consolidating. That is really the recipe for, the great success that you've had from what I've seen.
Thanks, Chris. I appreciate you, man. And hopefully we'll get to do this again soon. Always a pleasure getting to talk to you.
Absolutely. All right, everyone. Have a great week, and we'll see you in the week ahead.
Thanks, Chris.
Thank you, everyone, for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.